Nikola Corporation, a zero-emission vehicle manufacturer, planned to issue 200 million new common shares to raise about $1.5 billion for scaling up its production and building its Arizona plant. However, the plan backfired when the shareholders rejected the proposal in a vote on June 7. The company had to adjourn the meeting until July 6, hoping to get more support from the investors. Why did the shareholders oppose the plan? One reason is that issuing more shares would dilute the existing ones and lower their value. Nikola's stock price has already plummeted by more than 90% since its peak in June 2020, when it went public through a reverse merger with a special purpose acquisition company, SPAC. The company has been struggling with multiple challenges, such as regulatory probes, lawsuits, fraud allegations, executive departures, and delayed deliveries. Another reason is that the shareholders are not convinced that Nikola needs more capital at this stage. The company reported having $136 million in cash and short-term investments as of March 31. It also said it had access to $300 million in credit facilities from two of its strategic partners, General Motors and Bosch. Moreover, some analysts believe that Nikola's revenue projections are too optimistic and that the company will not be able to generate enough cash flow from its operations in the near future. Nikola's CEO Michael Loscheller said that the company would execute a reverse stock split if its stock does not comply with Nasdaq's minimum bid price requirements within a certain period. A reverse stock split would reduce the number of shares outstanding and increase the price per share, but it would not change the market value of the company. Loscheller also said that the company was confident that it would receive enough votes to approve the share proposal in July. However, some investors are skeptical about Nikola's prospects and doubt that the company can deliver on its promises. Nikola has yet to produce any vehicles for sale and faces fierce competition from other electric truck makers, such as Tesla, Rivian, and Lucid. The company also has to deal with regulatory uncertainties and environmental concerns related to its hydrogen fuel cell technology. Nikola's plan to issue more shares was supposed to help the company achieve its ambitious goals of becoming a leader in the zero-emission vehicle market. Instead, it turned out to be a major blow for the electric truck maker and its shareholders. However, the proposal was rejected by its shareholders on June 8, 2023, as it would dilute their current holdings and lower the stock price. This was a major blow for the electric truck maker, which had hoped to raise more capital and expand its production capacity. The rejection also showed a lack of confidence in the company's future prospects, as it faces increasing competition and regulatory scrutiny. Nikola had already faced several controversies and setbacks in the past year, such as allegations of fraud, resignations of key executives, delays in deliveries, and lawsuits from rivals. The company's stock price had plummeted by more than 80% since its peak in June 2020, when it went public through a merger with a special purpose acquisition company, SPAC. The proposal to issue more shares was seen by some analysts as a desperate move to avoid bankruptcy and salvage its reputation. However, the shareholders did not buy into the company's vision and voted against the proposal by a wide margin. This left Nikola with limited options to raise funds and continue its operations. The company may have to resort to selling assets, cutting costs, or seeking partnerships with other firms. The rejection also raised questions about the viability of Nikola's business model, which relies heavily on pre-orders and reservations for its products. The company has yet to deliver any of its promised vehicles, such as the Nikola One semi-truck, the Nikola Badger pickup truck, and the Nikola Tre electric truck. The company has also failed to secure any major customers or suppliers for its hydrogen fuel cell technology, which is supposed to be its competitive edge. The rejection of the proposal may signal the end of Nikola's ambitious plans to revolutionize the electric truck industry. The company may have to scale back its operations and focus on surviving rather than thriving. The rejection was a major blow for Nikola, which is running low on cash and facing competition from other electric truck makers. The company adjourned its meeting until July 6, 2023, to garner more support for the proposal. Nikola had asked its shareholders to approve a plan to add 200 million new shares, which would raise about $1.5 billion based on its closing price on Friday. The company said it needed the additional shares to fund its operations and objectives, including the production of its Class 8 hydrogen fuel cell trucks and the completion of its Arizona plant. However, the proposal failed to get enough votes from the shareholders, who were concerned about diluting their current holdings. Only 77% of the shares voted were in favor of the proposal, but it required more than 50% of all outstanding shares to pass. Nikola's CEO Michael Loscheller said he was disappointed by the outcome and urged shareholders to vote in favor of the proposal when the meeting reconvenes on July. He said the company had a strong business plan and a clear path to profitability, but it needed more capital to execute it. Nikola's stock price has plummeted by about 73% this year, as the company faced multiple challenges, including a fraud investigation by the U.S. Securities and Exchange Commission, a lawsuit by Tesla over patent infringement, and delays in delivering its vehicles to customers. The company also received a delisting notice from Nasdaq for trading below $1 for 30 consecutive days and might have to execute a reverse stock split to comply with the minimum bid price requirements. Nikola is not the only electric truck maker struggling to raise funds and meet production targets. Its rivals, such as Rivian, Lordstown Motors, and Canoo, have also faced setbacks and investor skepticism amid fears of a recession and supply chain disruptions. The electric truck market is expected to grow rapidly in the coming years, as governments and consumers demand cleaner transportation options. However, it remains to be seen which companies will survive and thrive in this competitive and capital-intensive industry.